Welcome to Mad Money. Welcome to Cramer. My friends, I'm just trying to make a little bit of money here. My job is not just to entertain, but to educate, do some teaching. Call me, 1-800-743-CNBC. Tweet me at Jim Cramer. Today, I'm calling it a total mixed bag. Dow dipping 285 points. S&P inching up 0.03%. And the Nasdaq advancing 0.28%. But this week, we put our biggest worries to bed. No more need to be concerned about the president invading Greenland or slapping tariffs on our NATO allies. Which means we can head into next week with a clear head and a focus on the fundamentals. Make no mistake, next week matters. Let's get it started with, I'm calling this cyclical week. You know why? Many of the big industrials and material companies report this week. And it starts with the best steel company in the world, Nucor. Now, with about 2 weeks left in the fourth quarter, as it always does, Nucor pre-announced its earnings results, and those numbers came in well short of Wall Street's expectations. Didn't matter. Stock jumped about 12% since then. And that's what happens when the Fed cuts rates and there are tariffs on foreign steel, as there should be. If the stock gets hit on Monday, you should be a buyer. Tuesday starts with Boeing. Now, this stock's had a monster move since the last quarter. I don't think you can report a number that can equal the actual move, but I wouldn't sell it either because this is the year one of a multi-year turn in the stock of Boeing. General Motors reports too, and CEO Mary Barra never gets the respect she deserves for what she's delivered through the years. Now, the day GM reports, the stock tends to underperform, particularly in the first hour or two of trading, just a pattern that I've noticed, and that's a good buying opportunity. If it happens again, pull the trigger. Hottest group in this market? Well, some would say it's the transports, including the rails. We're going to talk about CSX tonight. I like Union Pacific, which is trying to merge with Norfolk Southern. Let's see what they have to say. We saw Procter & Gamble rally on what a lot of people thought was a pretty bad quarter, okay? Well, Kimberly-Clark reports on Tuesday morning. I think it's going to report a better quarter. Now, it's also merging, though, with Kenvue in a cash and stock deal, and that could keep the stock in its place. But I have to tell you that I'm warming up to Kimberly more and more after what I saw with Procter this week and also with Clorox last night. After the close, we have our first big shortage stock, and that's Seagate. This maker of storage and memory chips has been making a fortune because no one saw the massive surge in demand from the data center coming except for a handful of companies, including this one. Stock's up over 25% for the year. You need a massive beat and raise for this one to keep it running. And guess what? I think you get it. CNBC Investing Club members, look out! You're going to be flooded with emails Wednesday because terrible trust holdings, Danaher, Starbucks, GE Vernova, Microsoft, Meta, and Corning all report. Let me give you a preview. After a multi-year dry spell, Danaher has big orders from biotechs for expensive management. It seems like a biotech comes public every day, doesn't it? They've managed some better than feared results in recent quarters, but this could be the first truly strong quarter in years. The stock was down barely today. Could be a real interesting opportunity. Starbucks is an oddity. It reports on Wednesday and then has an analyst investor day. What's called an investor day, Thursday. Now, I don't really know how this is going to work. How do you report on one day and then the next day have a big confab about your company? The stock's wildly overbought here, which means it can't keep climbing unless the numbers are insanely strong. I do like it for the long haul, not going anywhere, but I doubt Starbucks can tell a story that's good enough to justify this recent ramp because it's so overbought. GE Vernova's been acting funky. I think that's really a function of the monster moves that it's had for over the years. When it was spun out from GE in April 2024, the stock was at 140. Now it's at 657. GE's old power division has more business than it can handle, courtesy of the data center. Again, I love it long term, but the expectations are sky high for the moment. I think you need a better entry point. We had our Investing Club monthly meeting yesterday, and I spoke positively about Corning, which is busy replacing copper with fiber in data centers all over the country. I don't think I was effusive enough, frankly. I think the prospects are terrific. They own the business. I think you have to just hope it comes down so you can buy some. A bunch of the Mag 7 stocks have been underperforming, at least until today, when they roared. Still, Microsoft, Meta, and non-club company Tesla have turned into stocks that are very difficult to own except for select days. Microsoft's been weak in part because all software companies are under pressure from generative AI. I think that's a false worry in this case, but it's shaved the Microsoft price to earnings multiple pretty mightily. Meta acts terribly until today. Had a nice move yesterday. It was recommended the last 2 days, but I'll tell you what's really going on here. the last conference call when the company reported. Mark Zuckerberg lowered the boom. He said he's going to spend all he can. Can he walk that back, please? Probably not. Maybe he can explain how Meta's at least making money on the data center build-out besides intelligent glasses. Is that too much to ask? I don't think so. Next, repeat after me. Tesla's a robot company. Tesla's an autonomous driving play. It's not just a car company. And this might be the quarter that defines that new narrative. The stock goes higher. If so, here's what's going to happen. The stock is just going to, from the moment you see the results, the stock's going to go sky high. I'm not kidding. That's going to be the one that does the best if they define it as a non-car company. Last quarter, IBM reported a number that left the street rankled, but the stock quickly recovered. I could see it doing the exact same thing this time as traders dominate the stock of IBM. I don't know why, and they don't seem to understand what an amazing company they own or that they rent. Oh, and if you want to know what could be the biggest report of the week, well, at least in terms of consequences, I think it's going to be NOW. I think it's going to be ServiceNow. For years, this company and Salesforce were leaders in software as a service, enterprise software, we call it. Both businesses have continued to do very well, but their stocks aren't playing ball. ServiceNow stock is down more than 100 points from its high. I've never seen that in terms of percentage. The CEO, Bill McDermott, he's got to bring his A game to explain what's happening and tell us that this is merely a broken stock, not a broken company. We are really going to be glued to that one. Now, let's make things really tough. Why don't we throw in a Fed meeting, okay, which probably shouldn't really be a market mover, but we're getting closer to the conclusion of Fed Chief Powell's tenure, and this could be the day when the president picks his new replacement. I think this meeting's a sideshow, but I may be the only one with that opinion. I'm busy trying to make you money, not trying to speculate on Fed Chief. Thursday morning, we hear from Honeywell. Now, this is really complicated. When the company reports, almost every single time the stock's going down, plain and simple. The stock has run up lately because it's planning to list shares of its quantum business, Quantinuum, and that's got many traders going. They own the majority stake, and it should be red hot. But in the end, Honeywell's still a company that's breaking into three pieces. Well, it breaks into a couple of pieces, and I got to tell you, here's what's going to happen. You're going to get people who say, I don't want the automation. It's going to get people who say, I don't want the aerospace. And the other people are going to say, I don't know how long this thing's going to take, but I don't want to be involved with it. And that's going to cause the stock, I think, to take a hit. Would I sell it Wednesday to buy back Thursday? I'm not a trader, okay? Do I think that's exactly what's going to happen? Yes. We talk a lot about ancillary data center plays, which means Caterpillar, which has backup generators that are needed to keep these server farms running. In the old days, Cat usually went down on earnings. That's over. It tends to rally because people can't believe it can consistently put up such strong numbers. They are wrong. I liked the stock. Apple stock's been down for 8 straight weeks. Quite a dry spell. Why is that? I think it's the other side of the storage trade that everybody loves so much. Apple's a customer. It needs storage. They have to pay up for storage, but there's not enough to go around. Prices are way up, and bears say that Apple phones, as popular as they are, will show declining gross margins because of how much they have to pay for these storage components. I'm not changing my view. I say own Apple, don't trade it. But I respect the fact that if Apple guides margins down, it is reasonable to believe that the decline is not over. SanDisk and Western Digital report at the same time. These are our storage plays. They'll be very positive. I don't think they'll get the same reception that Apple does. I think people are going to say, wow, and just keep buying these, even though this one, SanDisk, is up huge, way too much for me. Friday can't come fast enough, all right? What do we got here? We got American Express. Again, I'm going to tell you what happens. They report. It's almost always a good quarter. The stock almost always gets hit. That's been the pattern. You have to buy it right into that weakest. It's stupid selling, I might add, and that's usually a perfect buying opportunity. We also have two oils, Chevron and Exxon, both throw off a lot of cash. I like Chevron with its big buyback and its 4% yield. It's been my favorite for a very long time because it's so darn consistent. And now you have a possible Venezuela kicker, as they're doing business there right now all through this regime, and they know what needs to be done. The bottom line, Mag 7s, momentum plays, red hot industrials, and a Fed meeting all in front of you. Keep your head up. Much more to come. Let's take questions. Let's go to Jude in Wisconsin. Jude.
Hey, Jim, how are you? Nebius has been getting a lot of attention lately. Where do you see the biggest risk in the company, and how do you see the AI infrastructure
I think that you see these stocks are all overvalued. What's going to happen is one of these Mag 7 companies is going to say, you know what, we're going to slow down the building, and then Nebius is going to be cut in half. I don't want that to happen to you. Let's go to, Dave in Illinois. Dave.
Dr. Cramer, or shall we call you Mr. Pink? Nice work at J.P. Morgan Healthcare Conference. And
thank you.
Shout out to staffer Sean and Josh, the total rock stars.
They are. They're great. They're great. And thank you for saying that because, we all kind of toil in the vineyard here, but you see me and you think, hey, Dave, it's just me out here. Why do you need those other people? It's the opposite. Without those other people, nothing happens. So thank you very much.
Absolutely. Jim, this $48 billion company provides healthcare services and products worldwide. Their stock appreciated over 60% last year. Jim, I like them. How about you? Cardinal Health.
Oh, Jason Holler. It's funny, Dave. I'm out there. You got all these great drug companies, and who am I most blown away with? Holler and Cardinal Health and that urology purchase, the new purchase just made. You're dead right. CAH. I can see that stock going to $300. And thank you for the kind words about our team. All right, we've got a busy week coming up, all right? I want to keep your head clear. It's kind of a nightmare, but we'll just work on it together. We'll figure it out. Chapel Trust Capital One totally blew up last night. I didn't like what happened, but I'm going to say, I'm sticking with it. Then in a questionable economic backdrop, maybe a rail, I don't know. All aboard! We'll take a look at CSX and give you my take. And, yesterday we held our monthly meeting for CBC Investing Club members, and we got a lot of questions. Sometimes there are too many questions, so I want to address them here on the show. You got a real preview of what being a member of the club is really like. So here's what you should do. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.